Hello guys, welcome to my YouTube channel. So in this video, I'm going to be showing you guys how to easily spot the order flow and how to know when there's a change in the order flow. So basically, what is order flow? Order flow is just basically the direction of the market at a particular point in time. So we can either have a bullish order flow, we can have a bearish order flow, and we can have a ranging order flow. So basically, a bullish order flow is just something like this: higher high, lower, higher low, higher high, 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 higher low, higher high. Then a bearish order flow is just basically the reverse of this. Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Then a ranging order flow is just basically something like this. The market seems to be in a range. This is what a ranging. So let me just quickly add some text. So this is a bullish order flow. Then the bullish order flow. Let's say bearish order flow. And this is a ranging order flow. So basically what you want to be doing is that you want to be buying when we are in a bullish order flow. You want to be selling when you're in a bearish order flow. And you also want to either buy or sell depending on if the market is currently at resistance or support in a ranging order flow. So markets gives you a higher high. You look for markets to take out a liquidity, then you buy. Then the same thing happens with the bearish order flow, then also with the ranging order flow. So let me quickly go into my chart and show you guys some chart examples. Then I will show you how to know when the order flow is currently changing direction. That's to know when there's a change in the order flow. So maybe if market is switching from a bullish order flow to a bearish order flow, you'll be able to easily know that, okay, the market has switched direction. Instead of chasing buys, you know when to switch to sell, so that you won't get stopped out. So that's just it. So as you can see from this current chart now, the market is on a bearish order flow. Let me quickly go to 4 hours. Let's see. All right. So as you can see, we've been having on this market, we've been having lower highs and lower lows. We're having lower highs and lower lows, lower highs and lower lows. As you can see. So lower highs and lower lows. So this is a bearish, they're currently in a bearish order flow. So this is a lower high, lower lows. These are break of structures. These are a break of structures. This is a bearish order flow, your break of structures. So that's just basically just it. We've been having lower highs and lower lows, lower highs and lower lows. Then let me look for a bullish order flow. Okay, on this other end now is a bullish order flow. As you can see. So we've been having higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. So this was a bullish order flow. From this direction, you can see we had a bullish order flow here, and we had a bearish order flow here. So the question now is, how do you know when the market is going to switch from bullish order flow to a bearish order flow. All you have to do is just wait for market to get to the key level or a potential draw on liquidity. Key levels are just basically higher time frame order blocks, higher time frame breaker blocks. Then draws on liquidity are basically just higher time frame fair value gaps. Then we also have old highs and old lows. So as you can see, market was buying, then came to this old high here, which was used as a support previously. You can see it. This place first touch, second touch. So it was basically a support zone, a key level on the higher time frame. The market came back to it, reacted from it, sold off, reacted from it, sold off. So basically, the very moment that our market gets to our key level and gives us a market structure shift on the 4 hours, the very moment market gives us a market structure shift on the 4 hours, then we know, okay, market has shifted trend. We don't just see a market structure shift on the 4 hours at any point and say, okay, market has shifted trend. Only when it's happening at the key level, old highs, old lows, order blocks, fair value gaps, and breaker blocks. That's the only time you can say, okay, the market has changed flow, so we're actually changing direction. So as you can see, we had the market structure shift here. We were bullish, 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 bullish. Then we had market structure shift here. We had the market structure shift here. So I immediately had market structure shift. We draw out your discount and premium zone. So this is the discount, this is the premium. So we know currently now we are entering a bearish trend. So what should we be looking to do? We should be looking to sell in the premium. So before you sell in the premium, then in the premium you look for your POI. That's maybe an order block, a breaker block, or a fair value gap. So when you go to the premium, okay, this is a breakout. This is an order block in the premium zone. The next thing you want to do is you don't just trade off any POI, any order block, any breaker block. You need to see market creating a liquidity. This is just kind of inducing traders into maybe a false buy or a false sell. As you can see, market came here, gave us this false sell. A lot of traders will have been shorting off this market with the hope that, okay, we've changed trend. Then the place market was reacting from is a fair value gap. So as you can see, it's a fair value gap on the 4 hour. So market reacted from it. So a lot of traders will be like, okay, this market has changed trend. Market's reacting from a fair value gap, time to enter. But that's the thing about liquidity. The market always creates liquidity. Markets lives on liquidity. Without liquidity, the market won't move. So market created liquidity here. So we had this liquidity. So once we spot our POI, in the premium zone, then we go for our sell. That's just it. Very simple. Profit target here. Stop loss above the other block. So this is a 9. This is a sweet 8.9 risk to reward ratio. So the very moment market changes trend, we keep on with the flow. We had our break of structure here again. We had our liquidity. The market sold off from our order block. This was our order block. So market sold off from the order block. So stop loss above the order block. Take profits below this low. So this was this sweet 5RR. The same thing happened again. We had this break of structure here. The market came, gave us our liquidity, then reacted from our breaker. So the market reacted from our breaker and sold off. So goes above this high. Then take profits here. So it's that simple. All you just need to do is find the market structure shift. Check out if you can see a market structure shift on the 4 hours once you get to a key level. which is old high, old lows, order block, breaker block, and fair value gap. Then once you see market structure shifts, you wait to see your liquidity. Then after your liquidity, you check for a POI in your premium or discount zone, and you take your long or short from whatever zone you see. So that's just it. So if you have any question, leave your question in the comment. I'll be in the comment section replying the question. Also hit that like and subscribe button to see more valuable content like this.